Bismillah ar-Rahman ar-Rahim. Welcome back. It is exactly 8:37 a.m. News and views on Salam Media. And my next guest is Ridwaan Kajee. He's a senior member of the 274 group of companies. He's a chartered accountant, and Ridwaan has dedicated over 5 years to 274. His focus at 274 is on Agrarius, the JSE listed company that offers investment opportunities in Sharia-compliant agriculture. He works closely with 274 Sharia Advisory Committee to ensure compliance and good practices, and has made valuable contributions to research and industry publications. And I'm just thinking, if I am correct, it might have been approximately a year ago when 274 was listed on the JSE, and I was there at the opening. We did a bit of a live broadcast, and what a morning. Assalamu alaikum to you. Welcome to the program.
Wa alaikum salam, Sister Julie. Jazakallah so much for having me.
Am I correct in thinking it was exactly a year ago or about a year ago?
Absolutely, absolutely. So our inaugural issuance and listing had happened around the end of October. So it's just over a year now.
Alhamdulillah, Alhamdulillah. And is everyone at Agrarius and 274 smiling? Are things looking really good? Alhamdulillah.
I'd love to say we're smiling, Julie, but it's been a busy year since the launch. Obviously, it was a momentous occasion to obviously get to that point. But obviously, since then, it's really just been all systems go. The markets trust us with their money, with their capital, and we've obviously had to deploy that over the last year, and are still obviously continuing to do so as we speak and over the next couple of years.
Inshallah. So lots of questions regarding, a year that's gone by. Let's look at recapping this past year and then talk more about Agrarius as well, because I think that's very, very important. And then also the highlights, not to forget that obviously with the highlights were challenges as well, and how you guys circumvented those challenges.
Yeah, sure. So I think, Sister Julie, I don't know if we should maybe start with a recap on who Agrarius is. I'm not sure how many
Please do,
in
please
the
do.
audience. It's in thinking about having this discussion, I thought the last discussion you had with 274 was obviously a year back. So Agrarius is effectively a company that was formed to invest across the agriculture value chain. So this includes not only farm activities, right, but off-farm and ex-farm gate activities, which we call them, such as logistics, cold storage solutions, and exports as well. So in layman's terms, effectively, Agrarius is a vehicle that raises capital from investors, both individuals and institutions. And this is obviously raised through the Sukuk instrument that most of the market would be familiar with hearing, and that we've often spoken about alongside Agrarius. We've effectively listed on that instrument on the JSE, allowed investors to access that instrument or buy those sukuk and give us their capital, and we then deploy that capital in a Sharia-compliant manner as Sharia funding solutions, really, across the agriculture value chain and agriculture community. So I think in reflecting on the last year, what we'd probably say is as the standout points is that we obviously managed to do our inaugural issuance, which was, as you mentioned, around about last year this time. We raised 500 million rand of capital, which is part of a broader 10 billion rand program that we had registered with the JSE. So our first tranche was really just 500 million rand. We've obviously been deploying that, as I said, throughout the last year across the agriculture value chain. We've got some really exciting projects, and I'll touch on those in a couple of minutes. But what we've also been able to do is, through the funding solutions that we've provided to the agriculture value chain and agri community over this last year, we've been able to generate a return, and we've been able to pay our first coupon, or first dividend rather, to our investors, which happened on September, and that was at around 11.5%. And we're very proud of that, and I say that in the humblest of senses. When you look at that, and I'm going to use some financial jargon here, when you look at that across other asset class benchmarks like equities, or how the rest of the JSE had performed, how money markets. So money markets is typically cash that is placed with bank accounts to earn, in Sharia terms like profit, but in conventional terms interest. When you look at money market benchmarks, we've outperformed a lot of those asset class benchmarks. So it's obviously something that we're very proud of. I think over the last year, market interest for our product and for the Sukuk continues to grow. There's actually been more buyers from our assessment in the market, so more investors looking to buy these Sukuk in our instruments as the year has gone on, as opposed to investors that are looking to sell. We have investors that are looking to reinvest their dividends. So once we've paid the dividend, they've asked us, can they reinvest it, because they've obviously been happy with the return and don't necessarily need to take that cash out now. So a lot of things have happened, obviously, in the last year. As I said, it's been busy, but alhamdulillah, it's been a productive one for us.
Undoubtedly, lots of uh, I should imagine short-term and long-term planning, very especially since things are going so great. And I guess you can't be too confident that it will always be so. We hope and pray it will, but there will be bumps on the way as well. Let's talk about some of the challenges and how you guys overcame those challenges.
Sure. So obviously there's been, if we think about the last year, on a macro level, from an economic perspective, it's been masked with rising inflation, which has driven up interest rates and has really put pressure on the pockets and disposable income of the general public. And I think what that has meant for us in particular is obviously negotiating, our profit with, underlying farmers has been a challenge. There are obviously banks and other players in the market and other funding providers that agricultural players have, like corporacies or cooperatives in the farming community, as it's known. And they also provide funding solutions to the agri value chain. So it's having to compete alongside, those type of institutions or funding providers, and being able to sort of, engage and convince our counterparties or investment counterparts as to, why our product is attractive. I think we've been able to do that, and I'm happy to touch on a little bit or a little bit more as to how we've been able to do that. I think it's a couple of things: flexibility of our products. So we obviously don't just go to a farmer and say, we'd like to buy this crop and sell it back to you. So thereby we take ownership, we agree a profit, but we're fairly flexible in the sense that if we're buying or providing a funding solution to his harvest, if that harvest is delayed, we're happy to sort of cater for that in our funding arrangement with these farmers. And I think, that's often what banks don't allow, although banks funding is slightly different to ours in that it's traditional debt and ours is not. Banks are a lot more sticky in the sense that, their funding term is quite fixed. And I think our flexibility has gotten us over the line where, in a rising interest rate environment, our product may have seemed to be slightly more expensive than what other options there may be available for these counterparties. I think, inevitably what we call a cash drag was a challenge for us at the onset, but I think we've managed to overcome that as the years gone on. And what that implies is that, as I mentioned, we had gone through our inaugural issuance last year at the end of October, and that meant that all of this money had come into us day one. And we at that point, we didn't have a home for all of the capital, so it had taken time to obviously find counterparties, find these farmers that require capital. So while we would have built what we call a pipeline of potential opportunities that we could deploy some funding on, it had taken a bit of time for us to just build on that and get to a point where we're comfortable that majority, if not all of the capital is deployed, so that we're effectively putting our investors' money to work. In simple terms, I think where we are today is I think a place that we're quite proud of. We've got a pipeline that far exceeds the capital that we have, and that's why we're actually going to the market at this point and are continuously thinking about our medium to long term plans around raising more capital, because our pipeline has continued to grow to such a point that it's really exceeding the amount of money that we have today to invest.
Alhamdulillah. As a Sharia-compliant investment company, how does Agrarius ensure that its investment activities continues adhering to Islamic principles? Can you explain the specific Sharia-compliant features of the Agrarius investment model?
Sure. So I think, I mean, as a starting point, what we do like to emphasize is that, despite being a Sharia compliant product, it's not just for Sharia investors, but, it's attractive for non-Sharia investors as well. In fact, most of our investors that had, bought into our product since issuance have been, large institutional investors that are not necessarily looking for Sharia products, but they really find, the features of our product in terms of the returns, the impact, the access to agriculture, something that's quite attractive and that's not, as easily available. But I think from a Sharia perspective, to directly answer your question, we do have an independent Sharia advisory committee. Now, this is made up of three highly reputable and experienced scholars in Islamic finance. This is our committee that's been with, the broader 27-4 brand and business since inception, I believe, or for a long time, in excess of 10 years. And they really keep us honest in terms of making sure that, one, the structure in which we put in place to access capital from investors. So that's really talking to, the Sukuk instrument, Agrarius itself, and how money is taken from investors and then held by us. That entire structure is Sharia compliant. So that's something they would have looked at the onset before the issuance last year. They've given us a certificate which evidences their approval of the structure, and they continue to obviously keep up to date. We actually, as an investment team, we have regular updates with them in terms of just giving them updates as to where things have changed, so that they're comfortable that everything still meets the requirements of Sharia law. Now, that's obviously at the point of raising capital and the sukuk. What we then have is obviously the deployment of capital, as I said, right? So that's investing into these farmers. And our Sharia advisory committee are involved in every transaction. They look at all of our transaction agreements. They've obviously given us a lot of guidance at the onset in terms of what are the core tenets of Sharia. And I think as 27-4 as a business, because we've offered Sharia products, it's something that we've been familiar with, and I think would be familiar with and comfortable to sort of ensure is the case in terms of Sharia compliance, even without our Sharia advisory committee. But that committee is still in place and remains in place and has to look at every agreement and provides their stamp of approval on every sort of transaction that we engage in with the underlying counterparty or underlying farmer, to really make sure that there's no uncertainty, there's no sort of features that are interest-like. There has to be the core requirements from Sharia trading, which is really shared ownership. It's things like having certainty in a transaction. It's things like fixing or agreeing your profit up front. And if it, as I mentioned, to summarize all of that, they really just have a look at every single transaction that we engage in, all of the agreements. They provide their comments, and once we address, their comments or their queries, they really then give us their approval before we can actually undertake or engage or effectively invest money with an underlying counterparty.
Okay, Ridwaan, we've got about 10 minutes to about 8 minutes to wrap up time, and I do have a few more important questions to put to you, but can we go for an ad break, please? Will you stand by?
Sure.
More wounded. Through the genocide, the men, women, and children of Palestine need you. Your support enables our team on the ground to deliver life-saving aid. Help Gaza today. Donate to Penny Appeal South Africa. www.pennyappeal.org.za 031 1100 573. Penny Appeal. Small change, big difference.
Discover the Africa of your dreams and surround yourself with her spectacular beauty. Relax beneath her serene sunsets and explore wildlife at its natural best. It's where the pride of Africa comes together. The Kwantu Private Game Reserve. Get to know the Big Five or cruise on an elephant safari game drive. Interact with lion and tiger cubs and enjoy world-class halal cuisine while we pamper you during your 5-star stay. Indulge in the true African experience. For reservations, call now on 042-203-1400 or visit kwantu.co.za. The Kwantu Private Game Reserve, the place of gathering.
The people of
Palestine need your support now. Africa Muslims Agency is on the ground, already providing food, medication, and emergency supplies in Gaza. Donate any amount to Heal Palestine at africamuslimsagency.co.za. Africa Muslims Agency, empowering, educating, inspiring.
For a long time, we've lived in a centralized world, where institutions held the all-important data and confirmed all transactions. Those times are over. Welcome to Libertas Group, a blockchain development company boasting an ecosystem that continually redefines the way we do business. Our blockchain is decentralized, making it immune to hacking or alteration, putting the power back in your hands with no middleman, so you can focus on the growth of your business. Libertas, the simplest investment choice you'll make.
Our brothers and sisters in Palestine are enduring unimaginable hardships. Ashraful Aid teams are on the ground, delivering crucial aid to those in need. But we can't do it alone. Palestine is suffering and they need your help. Your support can make a world of difference. Visit www.ashrafulaid.org today and donate to bring hope, relief, and healing to those who are in need.
Listen to something fresh. Listen to Salam Media.
8:54 a.m. news and views on Salam Media. Don't forget that on the top of the hour, Zai Jadwood will be bringing us the bulletin of the day. But right now I'm talking with Ridwaan Kajee. He is Senior Analyst, Agrarius by 27.4. We're talking about 1 year on and how things looking at 27.4 and, of course, Agrarius. Welcome back, Ridwaan. How does Agrarius select its underlying counterparties to provide funding?
Sure, Sister Julie. I think it differs on a case-by-case basis, but there's generally certain criteria that needs to be in place. You know, there needs to be a track record of the underlying counterparty or farmer. We don't do what we call greenfield projects or new farming projects. We have a strong preference for what's termed as irrigated farming, so we don't typically like dry land exposure, given the higher risks with it. And I think, we generally take what we call a project-based approach. So what we're doing is we're not providing on-balance sheet funding to these farmers, as a traditional bank would, but rather we're partnering with these farmers and players in the value chain on specific projects, which importantly have a distinctive cash flow event. So the key risk that we look to solve for before we're happy to embark on investment or a project is that of price risk. Now, a lot of people think that farming comes, weather is the primary risk. In our mind, yes, it's a risk, but it's less significant compared to price. If a region has good weather and a farmer sells his produce in the open market, his neighbors effectively are all going to have good harvests because of the good weather that he has. That results in an oversupply of his produce and it directly impacts the price that he can get. So what we typically focus on is price and making sure that there's a fixed offtake. And, just to make it real, I think, the example that we typically like to give is, one of the farmers or projects that we're backing, it's a potato farmer who actually sells his potatoes to PepsiCo or Simba, who makes chips, Simba chips, Lay's chips, those sort of things. And they effectively say to him, look, we're happy with your track record. This is the specific cultivar of potato that we want. They provide him with the seed. He's got to plant it, harvest it. And at the end of the day, the off-taker, PepsiCo, will effectively say to him, this is the fixed price that I'm agreeing with you upfront. So what we typically do in that scenario is we transact with the farmer where we provide him advance funding for his harvest. So we're effectively buying his harvest from him. And we appoint him then as the agent to sell that to PepsiCo at a specific price or agreed profit rate for us. And then anything in excess of that goes to him. Now, as I mentioned, we really get comfort over price risk, but there's obviously a lot of due diligence that goes into it. Over and above that, we spend time on these farms. You would have chatted to Werner, the CEO of the business last year. I always say to people, Werner's, he drives a buck, he lives in the Western Cape, he spends time on these farms. And you've got to do that, right? So as part of our due diligence, we understand the farming practices of these farmers. We look at the historical yields, their water rights, electricity usage, backup plans, We do assessment of their labor practices. So it's really quite a cumbersome but holistic process. And once we sort of do all of those things, we've actually got to go to our credit committee, which is made up of independent, very experienced individuals that, almost like a board sort of layer. They've got to really approve the transaction. So we as the investment team have to get comfort over price, water, etc., etc. We then package the opportunity for approval from our credit committee, and then we obviously then can move forward and make the decision.
Way, way, way more complicated than I imagined. Obviously, huge logistics involved there as well, and number crunching, undoubtedly. I've just got 2 or 3 quick questions to put to you, but very interesting indeed. I think this really requires a much more in-depth discussion, and I think it's so very interesting and sounds like a great opportunity for the community and South Africa at large. But in recent media news, we heard something about the purchase of Cape Span business by Agrarius. What was that all about?
Sure. So I mean, as Agrarius, I think where that's really come from is just thinking about the business from a strategic perspective of the medium and the long term. And what we've done, since was part of our inaugural issuance in the last year, is really deploying capital, over the shorter term, harvest finance or working capital type projects. But what we found from our engagement with the farming and agriculture community is that there is a need for longer term capital. And as part of our medium to longer term strategy, we're looking at, other investment opportunities that are medium or longer term. So things that, where underlying counterparty requires expansion for his pack house, or, has a track record but doesn't have enough land, is looking to buy his neighbor's farm or an adjacent property, which needs capital that is sort of longer dated, not necessarily something that will come back to us where we require return over, a few months, but rather, where we allow him a few years to really extract value from that expansion opportunity. So Cape Span is one of those opportunities that have directly aligns with that strategy. Cape Span is an existing business that is really a vertically agricultural player in the market. It's a South African business that and to explain it simply, what they do is they own farms in South Africa, but they also have access to what they call third-party farmers, or other farmers, not only in South Africa, not only in Africa, but in other parts of the world, particularly in emerging economies like South America. So what Cape Span does is they source produce, primarily fruit. Their core focus is really citrus, table grapes, and pome. Pome is really apples and pears. And what they do is they source this produce, whether on their own farms or third-party farmers from the Southern Hemisphere, and they effectively export it and control the value chain or supply chain to retailers in the Northern Hemisphere. So they effectively putting the fruit that is grown in South Africa and emerging markets onto the shelves of high-end retailers that are in, the USA, in, parts of East Europe, the UK. So they really effectively have a few divisions, but at the core of the business, it's really just ensuring that fruit gets really onto the shelves and of the more emerging economies.
And I guess
think
sorry for the interruption, that would also mean that they're able to control the pricing, because if they don't, you could have an oversupply, and it would then hurt the business of Cape Span, etc.
Absolutely. A core part of their strategy obviously is making sure that they understand, what price they're effectively able to agree with retailers. Now, a lot of the time, I gave the example of potatoes. A lot of the time it's not necessarily fixed price, but, in the agriculture world, they work on what is called often what is called a minimum guaranteed price, or MGP. And that really just gives you a range. It is really market dependent. So, what's well documented is, the citrus season over the calendar year 2022 actually had went through a very difficult year. Things like increasing input costs, increasing inflation, logistics costs, as well as an oversupply had put pressure on the citrus sort of subsector within agriculture, and that's not always in Cape Span's control. But given obviously their track record of being operating for the last 10, 20 years, they've been a business that has really been able to navigate some of these challenges and really try to make sure they can mitigate risks linked to price. Now, what I was just going to mention, Sister Julie, linked to that, that's effectively just a description of what Capespan does. As Agrarius, we've agreed and have signed the transaction documents to be the funder of the buyout of Capespan. So we're effectively providing capital, or the capital, to buy Capespan from the existing sellers on behalf of new buyers that are coming in. The new buyers, their focus is it's effectively their strength rather lies in cultivars. And cultivars, for your viewers and your audience that doesn't know or don't know what a cultivar is, it's really, if you think about the easiest way to explain it is a Clement Gold that many people find on the shelves. It's a type of nachi with a little black sticker, or cotton candy grapes. Those are specific cultivars that take a number of years through the various breeding programs to create, specific flavors, specific type of produce. Effectively, the buyer of Capespan is a business that specializes in cultivars. They've got their own brand of apples. It's quite exciting. Some of the apples that they've bred are being grown in farms across Europe, and the intention is really to merge that cultivar business with Capespan and really unlock value in the long term. So as part of Agrarius, we're really just providing the funding in a Shari'ah-compliant manner for that transaction, and hopefully can make a return for our investors.
Okay, we've run out of time, but I can't let you go and just give me two short answers, please, if you don't mind. But I do need to put these two questions to you. We're over time with our news, but we'll make an exception this time. What are Agrarius's future plans for expanding its investment portfolio and impact in the agricultural sector? And then last but not least, how can investors access Agrarius? If you can just respond to those two, please.
Sure. So, the immediate plan is that we are raising more capital. We're currently chatting to the market and investors because, we require additional capital for, our future plans, part of which is the Capespan transaction. So there's a lot of plans to continue raising capital and continue deploying in this space. I think from an access perspective, we structure our product in different tranches, but really, investors or the market can really go through their financial advisors or can contact us directly. Our details are on our website, either on 274.com or just literally putting Agrarius and 274 in a Google search, and there should be contact details through which investors can reach out to us, and we'll gladly facilitate next steps where there's interest.
Ridwaan Kajee, Senior Analyst, Agrarius by 274. Fascinating talking to you 1 year on, and it truly is a good news story. Thank you, and may you guys grow from strength to strength. My salams to the rest of the team at Agrarius, inshallah. Assalamu alaikum to you.
Jazakallah, Sister Julie. Wa alaikum salam.
It is exactly 5 after 9 o'clock. News and views on Salam Media. And of course, we are late for the news, but I know Zahid Jadwood will forgive me for that. Let's stand by and take the bulletin of the morning, inshallah.